Hey guys, you're not crazy. We're back again here. Obviously, we had some camera difficulties there on our last post, but welcome back to Mortgage Matters in Minutes. I'm Brent Rasmussen, your host, sponsored by Mortgage Specialists, obviously. So, what are we talking about here today? Crazy mortgage volatile rates. So, crazy volatile mortgage markets rates is where we're at today. So, I'm smiling because you have to every day still have fun with no matter what you do. But we've seen some of the most brutal last 2 days in mortgage rates changing that we've seen in decades. Obviously, that major impact transpired coming from last Friday when some of the inflation reports had come out and seen some of the highest inflation that has occurred in decades. We've been talking a lot about recessions, inflations lately, and it continues to keep getting thrown at us every day. So on Friday, nearly alone, rates went up about 3/8 to 0.5%. Monday, very much the same. I give you that in rate quotes because we watched the mortgage-backed security trading market, and we saw some of the two worst days that we've seen. And again, decades. What does that transpire to? What it transpires to is as people have been pre-approved and are looking for homes, their payments just went up significantly, hundreds of dollars a month. And that's a big thing. For some people, it isn't that have much disposable income and savings. But for first-time home buyers that are already maybe squeezed and tight in their certain time frame, that is a big issue. So where are we at currently with rates? It depends on where you go, and we'll talk about that here in a second. But rates are generally, with most type of loan products, aren't even in the fives no more. We're in the sixes for most particular rates, and that's right. For a 30-year loan, some people are stating, wow, weren't we just in the threes? And we were 3 months ago. We were just in the threes, but now, unfortunately, we have hit 6% and even lower 6%, depending on the loan product. But again, Friday we saw some notes, and the Fed hasn't came out and gave anything because they're in a no comment period right now. They're not giving out any information that could stir the markets worse or spiral things out of control. But the Fed is meeting this week. There has been talks, obviously, in the past that they were going to increase the Fed fund rate by 0.5%, but now there's major pressures to increase it by 0.75% to get control of inflation. Because if they don't get control of inflation, everything spirals out of control and we don't see normal markets that we're used to. Again, the Fed does not affect mortgage rates directly. This Fed fund rate is not a direct correlation to mortgage rates, but it does have an indirect factor because of all the markets that are out there and how they work internationally and nationally. They're all intertwined, basically. So we talked about where rates are at right now, and people are very stressed out. So what happens is they make lots and lots of phone calls. They call different lenders and just trying to find somebody that's going to give them a little bit better pricing just to make that payment ever so much affordable for them. And I can share with you now, more than ever in 25 years, I've seen different mortgage companies, banks, credit unions, lenders, all offer completely different rates. In a normal market, when things are calm and not volatile and busy and moving all over the place, 90 to 95% of lenders are going to be within the same interest rate. It depends how they quote without points, with points. But if you're trying to compare apples to apples, lenders are all in the same window. I mean, it's generally like gas prices. If you go around from pump to pump, generally, if we take an average, we're all in that same window. And mortgage rates are the same. But right now, because of how crazy everything is going, they're not the same. And people are seeing a massive difference, higher and lower, from lender to lender that's out there. What I can share with you about that is, yes, when you need those extra cheap rates, no one wants to give anybody a higher rate. We have multiple lending avenues we go through, and we can price that out with multiple avenues. But at some point in time, we understand that consumer that finds a much better priced avenue of a loan of 0.5% better. That's not normal. It's not going to be because certain banks and credit unions and mortgage companies just haven't caught up with the volatility of where they should be pricing their rates out. What does this all do to the housing market? It will slow things down. It will cause home prices to come to a more normality, meaning not necessarily go declining and lowering, but it may be that homes stay in the market a little bit longer. It allows buyers to think about for 2 to 5 to 10 days to make a decision on whether they want to buy that home. They can analyze the numbers. Maybe they can ask for closing costs again to be paid or a home inspection. So we're going to see some changes in this market, not always for the bad. It's obviously been a very hot market for a long period of time, and what we always stress here is financial responsibility, and that responsibility comes with you being a homeowner, which is having your regular savings, your maintenance, and having everything else in your life put together so you will be able to afford the home. Again, we are still not saying homes are a bad investment or a bad thing or they're overpriced. Similar to the stock market, home values continue to go up, and they will over time. Will we see some down parts that things might level themselves out? Sure, we will. But after those downturns, we're going to see them go back up, just like what we're in right now in the stock market. I know financial advisors are spending tons of time educating people to say, don't pull all your money out of the stock market. This is a cheap time to buy good investments. And I would say the same thing. Even if you're taking out a higher interest rate right now to buy a home, rates will come back down. They will. I guarantee you they will. Rates will come back down. We will be refinancing these people's homes that they've been buying these last year or two at a lower interest rate and getting that payment a little bit more affordable down the road. So while right now you think home affordability is really high, it can be for many, but not for everyone. So if you've had that savings, you have that plan set up, you're still in the market to buy a house because your rent keeps going up and you don't have something you call your home or call your own, purchasing is still available and it's still a good decision for you. And we'll be seeing and talking to those people next year and the following year and getting them back down to a 4% interest rate. And people probably think I'm crazy, but we can show them these statistics over and over and over that during a recession, home values keep true, keep good, keep high, and rates come down. We've seen that over and over every recession in the last 10 that we've been through. The statistics show in the favor of home ownership. And so I wouldn't suggest now changing your decision to not buy a home. I wouldn't suggest not buying a home because rates are higher and waiting longer. If you've been in the market and you're still actively looking, I think now is still a time to keep moving forward. It might be a little bit more expensive. I understand that. Everything's more expensive in our lives, and we have to work on having that savings and more discipline in our life, probably, to not be spending as much money as we have the last few years because it's been really good and really easy. I know it's not a fun time to talk about rates increasing. No one wants to hear that rates are higher. No one wants to hear that costs of goods are more expensive. But we've seen this. We've been talking about this for many, many years. A lot of people get very politically energized and disgust when these kind of things happen. And the government has a little bit to do with it. The Fed has a little bit to do with it. All of us have a little bit to do with it. But when we think of a decision rationally and we are educated, we can make the best decisions for ourselves. And I think that's what we're hoping to give you today is a little bit of sense of what's happened, meaning many realtors and buyers don't know rates have increased more than 0.5% since early last week. They don't know that rates are that. They might be looking at houses still, and we've gotten those phone calls back. What? The rate is that today? Unfortunately, it is, and many people have locked in, but not always can you lock in indefinitely. You can lock in while you're searching for homes, and there's lots of things that are put in place. So the biggest thing, obviously, be educated. We're here to help educate you in these markets. Feel free to phone call us anytime at 402-991-5153, or you can reach out to us on our website at mtg-specialist.com. I hope you all have a great rest of your week. Enjoy the summer. It's a wonderful time to be at it. Mortgage Specialists. Driven, trusted, reliable.